XRP has been finding upper areas of resistance in the last 24 hours or so. In today's video, we are going to be taking a look at the technical analysis on XRP, where I'll be sharing my thoughts and opinions as to where I think the price action is heading. As I get into today's video, if you do find it useful and informative, smash that like button. If you are new to the channel, subscribe, and let's take a look at what's going on with XRP. So here we have XRP paired up with USDT. We're on the 1 hour Binance chart here. And as you can see, we've been kind of fighting the idea of maybe trying to get a rally above the 200-day exponential, 200 hourly exponential moving average. That's the white line coming through the chart that you see here. Obviously, this is the previous trade idea that we had marked out in the previous video, which was to go short on XRP. You can see that we're finding support on the 50 EMA, 50 SMA. That's the blue and yellow lines coming through the chart, and resistance on the 200 EMA. Okay, our overarching structure is a bearish one, but of course we want to be aware that we may not have finished this wave 4 just yet. So we want to keep an eye on that, which is why we have a tight stop loss in that previous video. We're talking about a tight stop loss above the previous swing high. So we're looking for a bullish break above 54.59 cents, and a bearish break is basically going to be confirmed resistance on this most recent move. Okay, so we still are in that kind of flux of seeing or waiting to see what happens next from these internal structures, whether we get the break to the upside or the bearish break to the downside. As you can see, the 50 EMA, 50 SMAs just here on the chart, we did actually lose these. I'm just going to go ahead and move this trade idea just out of the way so we can take a look at the price action without that kind of flagging up. But here you can see we lost the 50 SMA and 50 EMA at 0100 hours this morning. We've gone up and we found resistance right here on the 50 exponential moving average at the moment. This could be a bit of a bearish breakdown for XRP. Now, I can't rule out, I should say, a potential fake out or a potential kind of liquidation event where we move up just a little bit before moving on down. The structure that I am kind of keeping an eye on is this idea that maybe we have a kind of wave 1 situation going on here. Okay, we have this move, and then we have the 3 waves up to the resistance of the 200 EMA. And we're starting the next big 5-wave move to the downside. We have the wave 1, we look for a potential move up to this upper area of resistance, and then we have this kind of bigger break to the downside. Okay, this would target out 1.618 times this initial move. Okay, so we'll go ahead and we'll pull that over to our current swing high, which does come in at a high of 54.02. Okay, so I'm going to go ahead and just put that on that level, and you can see the 1.618 target range would happen to fall down here at 53.02. And I'll go ahead and I'll mark this up with a 1.618 label. Okay, so you can see that right there. So this is what we're kind of looking for, which is why our short position is a very important one for XRP at the moment. Okay, because this will basically allow us to then take a look at this through the lens of a wave 1, wave 2, wave 3, up for 4, down to 5, and all of that is going to be a part of a kind of minimum expectation that we're going to have on this bigger kind of bearish breakdown that we can see forming here on XRP. We are looking for a move down towards 48.49 to 50.04. Now, if there's any bulls watching this, they are going to be looking for a price rally above 57.78. That is going to break this bearish pattern under the impulsive structure that we're tracking here. Okay, so we want to be aware that there's a few really interesting things going on. We are in lower highs here as well on this 1 hour time frame. We have the 5-wave move here. We have this initial kind of 3-wave move up here. We have the idea of potential diagonal, and still, you know, there's the idea that maybe we haven't finished the wave 4 and maybe we're just dancing around a little bit. It's also possible, but ultimately we are still looking for this bearish breakdown to complete. We haven't yet finished it. Now, interestingly, our momentum indicator isn't giving us the same kind of levels of understanding. So Elliott wave is to basically assuming that we are in this bearish structure, the behaviors of the buyers and the sellers are acting a certain way, which essentially means that we should be expecting these moves to the downside. The momentum, on the other hand, is saying actually there could be a relief rally here before we actually continue this move to the downside. Now, in terms of price action, what does that mean? Well, it would mean that we potentially haven't finished the wave 4 and we might see a little bit more of a run to the upside. And all we have here is an irregular flat correction. So where we had this 5-wave move to the downside, which we assume is the wave 1, it might actually be a C-wave structure like this under an irregular flat correction, meaning that's actually probably a B-wave structure. And therefore, what we could potentially be tracking here here is a larger wave 4, which would come in with A, B, and C structure, pushing us up a little bit higher. We can't rule that out. A momentum indicator of the stochastic RSI is kind of hinting that that might be the actual situation that plays out. Of course, either way, we can't confirm until we had confirmation of either a breakdown or a breakout to the upside. Now, when we take a look at our relative strength index, which is the divergence indicator here, we are in bearish territory. Not only do we see a bearish flag happen here on the 12th of October, so if we come in here, you can see we're hitting resistance and we had the bearish divergence against the relative strength index. We are lower than the 50 level here, so we are trending to the downside according to the relative strength index. Okay, so we have this to kind of confirm that we're in a bearish position. So stochastic RSI is indicating there's going to be a bit of a relief potentially here, but not a guarantee. The relative strength index is telling us that actually things are a little bit worse than maybe people want to admit. Now, from our volume profiles, we can also see that volumes have been decreasing into this move to the downside. This is why we are not seeing the stochastic RSI behaving the way that we would expect it to in a typical wave 3 position. Okay, this bigger kind of move to the downside. Volume profiles are actually decreasing as we've been pushing up and pushing down. There is just lack of an appetite for any kind of trading activity. So this weekend is going to be quite important for XRP. Can it get a close above 55 cents? If it cannot, then the bears are going to be in a pretty strong position going into next week. Okay, so there's a lot to kind of play for here. We'll be keeping a close eye on things. I do expect it to be a volatile moment for XRP's price action. If we can get a weekly close above 55 cents, it's going to be interesting for the bulls to potentially take that price action a little bit further. If, of course, we get a weekly bearish close, then we could be looking for further downside price action, which means I'm still quite confident in this short-term trade for a move to the downside, which is why the stop loss is where it is. And of course, like we did with Cardano, which will be that if things do change, we want to go long here, tight stop loss, and of course target out good risk-reward ratios of at least, I would have thought, a 2.0 on the breakout. 1.5 would be my minimum expectation. So again, if we do hit stop loss on this idea, we want to then reverse that and go long, and we'll be looking for the price action to potentially come up to the higher ranges here of around 55 to 56 cents. Okay, so again, lots of opportunity for XRP to perform well, but I do think that our short-term trade idea is still one that is likely to play out in my humble opinion. And talking about trading, Blowfin are at it again. If you're looking for a chance to score some serious USDT rewards, you've come to the right place. Blowfin, the cryptocurrency exchange, is hosting a fantastic promotion where you can grab your share of a massive 100,000 USDT pool. Yes, you heard that right, 100,000 USDT up for grabs. Blowfin is welcoming new users in the best way possible. If you sign up on their platform and start trading, you'll be eligible to get a slice of that 100,000 USDT pool. Imagine diving into trading and getting a chance to get some of that sweet USDT just for being active on the platform. Here's how you can get involved and get in on the action. Step 1, click the referral link in the description down below to sign up to Blowfin. Step 2, once you've signed up, you can start trading on the platform. And step 3, by participating in trades, you'll be in the running to claim a part of that 100,000 USDT pool. It's that easy. So don't wait around. If you've been thinking about getting into trading or are looking for a new exchange to try out, now is the perfect time to make your move. Use the link in the description down below to sign up on Blowfin, start trading, and get your chance to bag some of that sweet USDT. Okay, and all the terms and conditions can be found on the Blowfin website. Link is in the description down below. This is something that Blowfin are doing independently of YouTube, so it's not affiliated with YouTube. It's not affiliated with Cheeky Crypto anyway. This is specifically Blowfin. You can find all the terms and conditions regarding this promotion over on the Blowfin website using the link in the description down below. Okay, guys, let's go ahead and roll this up into a daily time frame, right? Because on the daily time frame, you can see we've had a big rejection from 65 cents, which happened up here on the 29th of September. This is a big move to the downside, and although there's a little bit of confidence coming into the market right here, ultimately it isn't giving us those big kind of bullish vibes that we needed to see. Okay, now it is possible for us to really rally a little bit higher, but at the moment we are still in bearish territory, lower than the 200 daily EMA, lower than the 50 EMA, and lower than the 50 simple moving average, the yellow lines are here. So we are in, unfortunately, a bit of a difficult position. Now, like I said, it's possible that we are in some kind of three-wave pattern and we still have that little run to the upside to go before we kind of break on down again. Again, that does kind of align with the idea of finding resistance on these EMAs, the 200 EMA, the white line, the 50 EMA, the blue line, and of course the 50 simple moving average, the SMA, the yellow line, right? So it's very possible that we do find these as resistances if we do break above that 54, 59 area that we were talking about on the smaller time frame. You can see the short position here still looking quite nice. We have our 1.618 target range at 53.02, and so everything's looking pretty good. The other thing that's worth pointing out right here is that in the next week or so, there's going to be what is called a death cross. A death cross essentially is the 50 simple moving average, the yellow line, crossing lower than the 200 exponential moving average, the white line. Now, this is called a death cross because it's supposed to be bearish, right? Essentially, short-term price action goes down lower than longer-term price action, right? So short-term being your 50 EMA, 50 SMA, and your long-term price action being your 200 EMA. Okay, so when you see short-term price action being trading lower than long-term price action, it shows that actually the market is in a downward trend. And ultimately, when you have the price action lower than the 200 EMA on a daily time frame like this, your default position needs to be bearish. Likewise, when you're above it, you get the golden cross, right? Golden cross is when the 50 SMA, the yellow line, crosses above the 200 EMA, and of course that would be a bullish breakout kind of situation. Now, what I do want to point out is that all of these EMAs and SMAs, all of these lines here, they're just laggy because they only show you what's already happened. Essentially, when we're talking about a 50 EMA crossing lower than the 200 EMA, what are we talking about? Well, we're talking about this big move over here and over this side, basically taking into consideration 50 candles on average and basically looking to go lower than the 200 candle average. Okay, so what's really interesting about that is obviously a lot of people will react to it and there'll be emotional reactions. So death cross has a big kind of scary label, and essentially it does mean that a lot of people kind of start selling into that because of fear that, you know, maybe things are going to go down quite dramatically from that point of view. Obviously, it only shows you what's happened, and typically you might see a short-term reaction to a golden cross or a death cross. It isn't usually long lived, and you actually tend to find that price action does rally because it's only showing you what's already happened. Positions kind of get liquidated and wiped out as the market moves in the opposite direction. So a lot of people tend to go short when we have that event, but actually the reality of the situation is it tends to be actually the opposite way round, with short-term short positions working out well, but not long-term short positions. Okay, so on our daily time frame, we are just in a ranging market. We've been dancing around the 50 EMAs, 200 EMAs for quite some time, guys. As you know, we are obviously hitting the upper area and getting rejected, and we go down to the lower area and we find a bounce, right? And so for reference, we're talking 65 to 75 cents being an area of previous resistance, and it still holds up as such. And down on the low side, we find support between 33.46 and 46.16, and we are just looking for another bearish break to the downside. We are looking for an ABC structure here for rejection from the 65 cent area, so we will be looking to come down here over the next several weeks or so. Like I said earlier, the weekly close is a very important one. If we take a look here, we can see the bears are going to want to try to drag price lower than the 200 weekly EMA for a bearish close. That's going to be anything lower than 51.22 cent, and the bulls are looking for a close above the 50 EMA and specifically 55 cents. So they're looking for anything really above close wise on the weekly chart, 54.73 for the 50 EMA, but ideally they want to be above 55 cents, which is a psychological area, but also an area of previous support resistance. Okay, if they can rally above 56.22, that puts them in a very strong position for next week. Do we think that's likely? Probably not. The weekly close positions at the moment are looking strong. We haven't closed lower than the 200 EMA for several weeks since we broke it on the 8th of July. So any closes lower than the 200 EMA will be seen incredibly bearish here for XRP's price action. As you can kind of see, no close positions up here either in this higher range above that 66 cent level, no close positions there, and we did close in fact down here on the 1st of July for the first time in that lower range between 33.46 and 46.16. Okay, so on our weekly time frame there's a lot to play for. We're looking to see a strong close positions or weak close positions and act accordingly. Like, we don't really care typically as to which direction the price goes in. We just want to be able to know what we're going to do should those scenarios crop up from a trading point of view. you. From a hodler's point of view, actually, you kind of want this to be a little bit bearish right now so that long term you can be better and deal with the kind of the euphoria, the parabolic runs of 2025. So you actually want to take some short-term pain, in my opinion, as a hodler, and you want to then enjoy the longevity of it later. If you take a pump now, you're going to pay for that a few months down the line. So in my opinion, as a hodler and as a trader, I don't care about what position I'm going to be trading with my trading positions. I'm going to act according to what the data tells me. But from a hodler's point of view, I'm going to actually be looking for short-term pain so that I can enjoy the long-term gain. Okay, so that's kind of where I sit with this one. But of course, it's just my thoughts and opinions on the data in the charts as I personally see it. What do you think? Let me know in the comments down below, or join us in our free Discord server. I'd like to get everyone's thoughts and opinions on this one. And guys, if you have found this video helpful, smash that like button. If you're new to the channel, subscribe, and don't forget to check out this video right here. It's not one you're going to want to miss.